The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have Fed Day, folks. Dow up 155, Nasdaq up 58, S&P's up 29. Gold contract caught the bid. Gold's up 730, trading $12.60 an ounce. You got silver up 17 cents, $14.87. Light sweet crude, that's took it on the chin in a big way yesterday. It's up $147.24. Bottom line with oil, folks, okay, that thing came down, wide price spread, monster volume. $42 is game now. I mean, the bottom of that range it's in is $42. Notes and bonds, they are at highs right now. You get the 10-year note flat, 120.28. 30-year bond up 11, 144.07, and you can expect more movement than those also. Now, King Dollar's down 500 ticks, trading 96.085. If we take a look at what King Dollar's done, King Dollar has an ABC structure on the way down intraday right now. That just broke a good B point. That'd get a price projection of 95,400, which gets it under the August high. Gold and silver caught a bid. The XAU, the HUI took out swing points yesterday with volume. You put that together, that's saying that we're going to get a dovish call. The real question is that what is the market going to do on that? The euro is at 114.28 to 1 US dollar. The yen is trading out here at 112.24 to 1 US dollar. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Think or Swim. Don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, if you want to understand options, option strategies, futures, great program. We have option expiration this Friday. And, we were talking about this yesterday morning to Kevin, and it's interesting what the premiums they put in, because the trade was yesterday morning, actually. Okay. By the time that the market closed yesterday, right, the premiums inside the put side of the equation, that will change out here today, was basically double at the money than they were when we started the day.
Through the roof.
Yeah. Kevin Hinks, what's going on?
Well, Jerome Powell, your table is ready.
I know.
Spotlights.
I don't know a time in his professional career where every single word he says is going to be dissected today. So it's going to be pretty interesting. You know, he is by nature hawkish. So it's going to be real interesting to see him if they raise rates and he goes dovish, which is what a lot of people expect to happen. It'll be really interesting to see how he does that. It's going to be must-see TV, guys.
Yeah, no, I agree, man. I mean, and, right now the Fed Fund futures, folks, is still only at 72. 72.4.
Back above. It was at 64, though, yesterday, right?
Yeah, it was. And
guys, never have I gone into one of these meetings with less confidence in something at this percentage. It could really go either way. I really do believe that today.
Yeah, no, I do too. And what's amazing is that in the aspect of how he speaks, I love how he speaks because I think he speaks clearly.
Sure.
I really do.
He's extremely forthcoming.
Yeah. And, so it's going to be, when I look at the market, I'm saying to myself, man, oh man, what is it? And what's so cool about this, folks? There's so many pulls and tugs and the bears and the bulls,
Sure.
going like crazy, like in this whole thing. And you don't know who's basically talking their book, writing their book versus like what it is.
Everyone's got an interest.
Everyone has an interest, man.
All the way up to the president.
Totally. Hey, listen, man.
It's like, think about this. Donald Trump is talking his book, right? He's a real estate.
Yeah.
And frankly, no president wants higher interest rates.
No.
None. Alan Greenspan said that in an interview. No one has ever wanted higher interest rates. And then you got Jamie Dimon talking that rates should be higher, but he's talking his book. He's got net interest margin, one of the biggest accounts in the world, that he'll make money off net interest margin. So everyone in this is talking the book. Make sure when you listen to someone who claims they're an expert, make sure they're not just talking their book.
Yeah, there's no doubt.
Definitely.
And, because, what's so intriguing, between, so you had Druckmiller basically in the Wall Street Journal. Then you had, Gunlap, he's the big bond guy.
Yes.
It's like, these are the biggest dudes in the world, man.
Hey, why not, man?
Yeah.
If you can get some airtime, right? Put out your...
I'm not saying why not.
No, I know you're not, but I'm saying
that,
right?
people were giving them like, oh, these guys got to be right. Well...
They got to fill time, right?
Yeah,
they got to fill time, totally.
I tell you, man, it's going to be wild. And, of course, Kevin, we have, that market yesterday, man, that S&P just gave it up again, started jamming into those lows. I kind of like how it actually reacted. You know what I'd really love to see out here today, folks? This is what I'd love to see. I'd love to see the Fed come out and the market jam the low one more time and reject it. Because if it rejects it, this thing is going to go. So
yeah, every time a sell-off, this, Tom. Every time a sell-off happens and it fails, the market gets stronger by definition.
Right. Particularly because they got it down good. And it was fast, and that's what, basically you were talking about that to us, that, it's taking out the stops, man. I mean, because, when you have those swings, folks, I mean, everyone's on the other side of the swing.
Sure.
It's like, okay, how far are you on the other side of the swing? You know what I mean? So, it's going to be a good one. The chip stocks, what worried me a little is that chip sector, yesterday it was the leader up there, and it just gave it up in spades, man. And it's like, okay, what's that all about? And, those things...
Well, I think it's pretty interesting, Tom. What you're seeing today is Micron. Micron that had pretty horrible earnings, right? I mean, remember, they made $2.97 a share, which met expectations. But hold on a minute. The end of September, expectations were $3.15. So they had lowered guidance already down to that $2.97. So, but Micron, this is one of those names, guys. This stock is already $1.60 off its low of the day.
Yes.
So there's some people picking some bottoms here in Micron because even though there was kind of a capitulation on the management team, they look like they're hunkered in for the long haul, and they expect a second half of 2019 recovery. People looking for cheap stocks will love that news.
No, what's amazing about Micron is that I remember when the potato guy, the biggest potato guy in the world, owned Micron. He was the Sempler, I think his name was. And it's such a personality stock. You know what I mean? I guess because, the chip business in general is a commodity anyway. But it always blew my mind that this stock could go up and down so dramatically. Like, if I bring this back, I mean, it's like insane, like how this thing could go. Like, if I bring it back to 93, it was at $4. You go up to 95 and it's at 47. You go to 96 and it's $12. It's like, it just loves to move, man.
Right. Exactly. I mean, it could, but I love the action today on Micron. It's pretty fun stuff.
No, listen, they're buying at those lows. Listen, folks, right here, big action all day long. Kevin and his team, 45 minutes from now. Kevin, you have a great one, safe one. Hold on for the ride, baby.
All right, guys. Thanks for having me on. Have a great day.
Thank you,
Kevin.
You too.
Thanks.
Stay right there, folks. Tommy and I are coming right back.
The Taz Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow Industrials up 203, Nasdaq up 68, S&P's up 32, and we're going to have oil at 10:30.
We sure are. So what time is it? It is 10:18 right now. We get those EIA numbers at 10:30. And just to put this, how about, I mean, we all saw, I imagine, if you're watching this show, the move in oil yesterday.
Oh, yeah.
But look at these daily bars, right? You just put it on a daily. You go from 49.62 down to almost 46, $3.50.
It was a fast move, too,
and then, you know, just tacking on even Monday. So from Monday, you go from 52 to the end of the day, Tuesday, to 46. Which is crazy, right?
Right.
So we'll back it down into a 5-minute chart. Right now, quite a little bid on oil, even from this morning. You're looking at about 8:30. We're trading at 46.59. We're now up more than $1 from that level. You got oil trading at 47.70. Looking at the February contract. And let's just see how some of these spreads line up. So we'll jump to the 11 a.m.s first. And we're going to have an option at 47.50, which is not bad. We're about 17 pennies away from that. I imagine there's going to be some premium priced into this product this morning.
There should be.
Right, yeah. So this has a floor of 47.50. We're trading at 47.63. Really not that bad.
No.
You know, you're forced to buy at about 12 pennies above where the market is, but with paying that, you have a risk reward of risking 27 to make 123. Even if you just want to be bullish, you know, after such a destruction from 52 to 46 over the last 2 days, not a bad price. You got oil trading at 47.68. You're buying it at 47.78, and for those 11 cents that you're paying in premium, you get this type of risk reward.
Right.
Pretty good. And on the flip side, to see how things, now this would be your out of the money right now because we're trading above the ceiling, 47.71, and not that bad. You know, you're selling it at 47.35, risking about 14 if you ever saw a pullback back to kind of the lows of yesterday at 46. So both of those lining up at about $43.
Okay.
Now that is a little pricier, but keeping in mind that we're about 16 pennies away from, so you
Right.
have that intrinsic value, which prices it sometimes. Let's just see how some of the noons. So we'll jump back over here, jump to the noons. So we have the same exact spreads with 47.50 on the bullish side. Again, really not that bad. You're buying at 47.83. So this one having exposure till noon instead till 11. And on the bearish side, pulling this up.
So they're charging 8 pennies on that side over the 11. For the
18.
time.
18.
Yeah, no, I know that, but I'm talking about from the.
Okay. The difference between the 11 a.m. and the noon is nice. And then on the bearish side, you're looking at 20. So 53 versus about 43, which was the 11. And then let's see how the dailies line up because, man, like, you know, we might get some action past noon in this market.
Yeah, this would be a day that the longer you could go out, if that premium was a killer, there's no doubt.
I mean, could you give me a defined risk for, like, the end of 2018? I'll take that, too, right?
Yeah.
No, seriously, because I imagine the volatility in oil is not going to stop anytime soon. So the dailies line up with 47. Not really an ideal trade if you're making a volatility
These
trade.
are 230, right?
Yes.
So you know what's so cool here, too, folks, all right, is that picture. You got oil priced in U.S. dollars. We got the Fed out at 2.
Yes.
So as the dollar moves, it's going to affect oil also.
Sure, definitely.
You know.
So you had a couple options. I mean, if you just wanted to go bullish, really, or bearish, but bullish, not a bad trade with some defined risk. You get $3 to upside to 50, right? You get oil trading at 47.73. You're buying at 47.89. So yeah, you have exposure all the way down to 47. But not the end of the world if you really wanted to go bullish. At least you're defined there if you got something to fall off the plate. Let's see how these line up. Yeah, so 46 being your only option really for the $5 spreads that expire at, and that's just, it's a little bit more. It doesn't quite, you know, defined risk when you're risking, you know, $1.77 in that oil market. But we'll see. It's 10:22. We get those numbers at 10:30. And let's just check back and see that chart. It's not stopping, man. We're rising as we keep speaking. We might be at 48 by the time those numbers hit.
Nice.
Yeah.
Let's go over. Let's see. What is it? One of the targets wanted to look at something here. I had it up before. Where's Mike? There it is. SJT.
Okay. So
SJT. Let's see what we got here. Okay, so this is San Juan-based royalty trust. It's a trust between Southland Royalty Company and Fort Worth National Bank. The trust receives royalties from its overriding interest in oil and gas. The low is 435. The high is 1054. It pays a 9.6% dividend.
And that low was 2 days ago.
Yeah, there you go.
There you go.
So if we bring this back,
man, you want some volatility.
And the question is this a rejection of lower price with light volume? And yeah, it is. And it's not on, well, it's on both. So what you have is this: when you bring this baby back, December of 2015 goes to 399. That had volume of 8.3 million on the monthly. We came back down to 450 with 4.7. Now we're at 2.7. And so today's the 19th, right? Yeah, it does. So when you ballpark this, that doesn't look like it's going to do the volume, and you're inside the 450. Okay, so that's one way of looking at it. And what I like here is that you do have some volume up at that high of 1054. Now the danger part, what I've seen is this: 1054. This is where the danger comes. When you come off a bottom like this, and you don't take out a swing point, it really doesn't mean as much when you have volume. And when you see there's no swing point on the other side that it really took out, because, you know, you could say that this is a swing up here, but that's 1141, and you only got to 1054. It's like, you didn't take it out. Now, when you get this closer, if I put this in closer, what you have is that we had not 770,000 shares, which this stock doesn't trade like that, meaning you're going to see we only done 10,000 shares thus far.
Sure.
So that's 773 at 450. We do 394, and then we get a small amount of strength. So yeah, I'd say that, you know, I mean, if you're looking, you know, to basically try to get that up at the other side of the curve, meaning 626, it's probably not a bad deal. And what's cool here is that because oil has got so smoked, I mean, picture, you know, we went from 75 to 47.
Sure.
Well, of course, this thing went from 625 down to 435.
Now, what's interesting here, too, though, I saw is that, because I was looking for that same correlation, but I think they have some natural gas exposure. And you had natural gas up yesterday, and that's what, so yesterday, right, oil went down $3, but you had this trade from 440 up to 477. So they have more than oil going on in this stock.
Yeah, it's both.
Yeah.
So let's just see if
Just click them more if you could to see. Can I just expand their description?
Yeah.
I want to see. Okay, not much more, but oil and gas properties in the San Juan Basin of New Mexico.
So if we go like this, I'm going to see if it breaks it down.
Yeah, it doesn't, unfortunately. So it's royalties from oil, gas. But
look at the differentials there. Look at how they go up and down.
For sure, right?
61 million in 2014, 33 million in 2017. They've all of 12 million so far in 2018.
Yeah. And they were saying mainly natural gas, I guess, that Mike was chiming in.
I see.
Who would ask that question, yeah.
Okay.
And that makes sense. If they were up yesterday, they're not all in oil, right? I mean, it's just crazy for...
So let's go look at the natural gas market. So natural gas right now, this thing has been, it's up 7% one day, down 7% the next day.
There you go.
Yeah.
Gave back all of yesterday in a heartbeat.
Right. Now, it looks to me, the natural gas, I think this thing wants to just close that gap.
Okay.
Which is 333.
That's the high of that gap, right? The low, what's the...
Yeah, just right there.
No, the high. Yep, 333. Okay.
So we got into 350 on Monday. Yesterday, you go up to 380. Today, you get to 389 and just give it up.
Yeah.
Stay right there, folks. Tommy and I are going to be coming back. We're going to have those oil numbers.
I'm just going to check on that oil to see. So 47.63 as we come into that break. We'll see what...
Dow Industrials up 182. Nasdaq up 63. S&P's up 31. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had crude inventories fall 497,000 barrels.
And the number they were looking for initially is Bloomberg. There's a few estimates out there. Bloomberg looking for a drop of about 1.35, so not quite the drop they were looking for. Gas inventories rising 1.7. See how that market's reacting. A little bit of a spike higher, as you would expect with, those numbers coming, but right back to where we were. We'll see how that shakes out. But initially 47.75 in the price of crude. And as we know as we watch this.
And we had the API last night was a build of 3.5 million.
Yeah, it was 3.45. Yeah. You said a surprise build. They had that. There you go. API had a 3.45 barrel rise last week, which was a surprise, and that number coming in. So you had crude oil falling about 500,000 barrels, and yeah, kind of hanging around 47.73. We'll see where that number shakes out.
I love it.
Yeah.
877-927-6648. Let's go into the NDX and see what we have happening. Strength versus the weakness. So inside the NDX, Mercado Libre is up 4.7%. You get Netflix up 3.4%. Autodesk is up 2.9%. Taken away from it, Micron. Micron, bottom line, Micron's already come back $2.
Yeah, they're down 2.3%, but quite a...
NXPI down 1%. FedEx, here you go.
What are they down? 6-7% maybe?
Monster.
Where are they at?
Look at that. $17, 10%. This is I wonder if this is going to be life-changing for FedEx. I wonder what it's really about. Do you know what I'm saying?
Yeah.
That is one.
They kind of put it out there, as in, and that's why the market's reacting, as in they didn't kind of beat around the bush. You had the CEO out there really saying, things are pulling back in a dramatic fashion. Across the globe.
Yeah. So 147 is the number. I wonder, one of the Tigers is, and they were talking about the tariffs, and that could be it. I mean, bottom line is that if you're paying more money coming out of China, for bringing it in.
I was trying to read about. I think they kind of tied in both parts: global slowdown and tariffs. But really globally, and then the question was, like, the U.S. is okay. Is that going to kind of reverberate to the U.S. when speaking much broader than FedEx?
Yeah. Reflecting an abrupt change in FedEx's view of the global economy. Yeah. Because years ago they had bought. I forget the name of the company. It was a monster company, European company. That was the FedEx of Europe.
Okay.
And so they're in Europe in a huge way also.
And so you have the CEO, the new CEO, right? A FedEx veteran named this month to take over the Express Cargo airline.
Oh, great.
I know, right? Welcome to the party.
Seriously, man.
Saying the peak global economic growth now appears to be behind us. So there's your global growth, part of it.
Yeah.
But then they did have in here, I believe, talking about the tariffs, of course, with especially the U.S., the China. It's jumping in here, and that's where the big question is: if the rest of the world's catching a cold, does the U.S. catch it as well?
Yeah.
Talking about, and that's just another analyst, but kind of, FedEx. It's a good indication of global business. So.
And we go to UPS. So UPS.
It would make sense they're pulling back.
It's taking the hit. Now, what's intriguing, and this is where UPS, the chart in UPS in general was worse than FedEx anyway.
Okay.
Because, that's trading right now at October of 2013. Let's go back to FedEx just to see what.
Sure.
FedEx could be there right now, but let's just see.
Let's see.
October 2013.
Yeah, no, they're above that level. Back it up. That's 14. That's 14.
Yeah, no, that's what I'm saying. They're at 14, right?
Yeah.
So October.
A little bit further. Nope, the other way. Right? There you go.
It's 130, yeah, so they're quite above it at this point. But guess what? That's where they're going. They're going down to this 130 area. They're at 167.
And especially, look at this month for them, man. Not even counting today, right? They were just at like 183, as in at the end of yesterday.
Yeah.
But look where they were. Can I pull that? This monthly bar, 234. Pretty remarkable.
That's the market that we're in right now, folks. This is where you really better pay attention to it, because these equities that I would say that are premier equities have got hit more than the S&P. And there's quite a few of them, that just got taken apart, man.
Sure.
You can go into those FANG stocks. You can go into Netflix.
Sure.
Look at this. You blink, and, this was the strongest stock in the market last year.
Yeah.
And is that 2018? Yeah.
Yep.
So In 6 months, you've gone from 423 to 279.
Yeah, and that's after being up 4% today, 3% today
right,
alone.
Right. And you can see last year this was the strongest stock in the bull market last year.
Now that's this year you're looking at, right? So that's 2018 we're checking. It was leading up to.
So that's 2 years.
Yeah. I mean, 2017 was a good year, but really the first 6 months of 2018, just gangbusters.
Just kept going.
Yeah. They went from about 175 up to 425.
Yeah. Now the cool thing about Netflix is you can see what it did. It came back to its breakout area, and it did have lighter volume. You know, so when you take a look at that on a larger basis, let me just do it this way, and then see what kind of retracement this was in general. Look at that. So if I bring that back to 2012, that's a 0.382 retracement. That's not bad. You know, that's not bad. And, you know, if you're a long-term person, I know this is hard to basically take, but when you really do look on a longer-term basis, you know, when you do a 0.382 retracement, that's a retracement in a bull market move. Let me put it back at 20 years. Yeah, let me do the whole thing. Now watch this. I'm just going to do from the lows to the highs.
I think that's pretty much what you had.
Yeah, that's nothing, man. That's nothing. So, you know, that's where percentages, when you do get markets that go so much higher, it's like point-wise, you get killed.
Sure.
But percentage-wise, if you're a Fibonacci person, that's a normal move. That's a normal move in a bull market. Never mind.
I would just say that that's starting at $10. So if, I don't know how many people were in Netflix at $10, all the way up to $4.25. You know, it's quite a run, right? Or
oh, it is.
Yeah.
My point is though, when you're doing it technically, that's how you do it.
Sure.
You know what I mean? That you say, okay, from lows to highs, what did it do? Well, it only did a 0.382. Well, guess what? Another 12 years, that could be an ABC up.
Sure.
You know, so.
Sure.
You know, it's.
And I imagine Netflix is going to be fine in another 12 years, like you say, just fundamentally on their take and their business, and they seem to be growing gangbusters across the globe every time they come out with earnings.
Listen,
so.
if you learned anything from Amazon, you know, you keep having people say about Netflix, they're still spending too much money. Well, guess what? You better learn something from Amazon. They spend too much money, and then all of a sudden, they have too much money.
Very true.
You know.
Checking back on oil real quick, pretty much hanging out right where we were. We were sitting right at about 47.70. We came into that number, and we're sitting right there. So we'll see how that reacts. Let's just jump to natural gas. I'm just curious if that market's moving around on those numbers.
Well, you know what's funny is that when Monday, Jim called me from Minneapolis.
Okay.
It was 43 degrees in Minneapolis, folks.
They're doing cartwheels in the street?
That is not what's supposed to happen in the winter, and that's why you're seeing this volatility inside the natural gas market too.
I know. I looked up Boston weather this morning. Around it was 21 degrees, so they got a little chill up there.
I gotta leave the jacket on when it's 60 degrees.
Me too. Hey, listen.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials trading up 187, Nasdaq up 68, S&P's up 32. Come right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow up 203, Nasdaq up 64, S&P's up 34. Let's go over to our man, Mr. Teddy Kegstad at Forex-Trading-Unlocked, and this couldn't be a better day, folks. We got Powell and the gang out here at 2 o'clock this afternoon, and we are going to have currencies moving big time. Teddy, what's going on, brother?
Yeah, you're right. We have a Fed day, and we definitely have a lot of anticipation in front of what's going to happen this afternoon in the currency markets.
Yeah. So what are we thinking, man? Like,
Well,
just currency-wise,
right now,
what do you
I
think?
think,
I'm sorry, go ahead.
I think that the Fed aside, right now, the U.S. dollar is a bear, especially when you look at how it's reacting to the Swiss, the Canada, the yen. That's another one. I think there's a power move going on there. And I don't think anything that the Fed has to say today is going to change that momentum right now.
Yeah. So that would be basically saying that the Fed, I mean, if we just took it on a fundamental basis, I know we're not fundamentalists, but we took it on a fundamental basis, we'd be saying that the Fed's going to be dovish. They're going to have a whole flock of doves flying.
Yeah, absolutely. I agree.
Hey, so, you know, we're just looking at the pound's getting a move, too. It's trying to basically get back inside its range, huh?
Yeah, the pound definitely took another beating, you know, over the past week and a half, and right now it's definitely trying to regroup. And I think that the dollar weakness is going to be what's going to give the pound a leg up now.
Okay. Okay, so just that's you know, I can see that, right? Instead of the pound being strong, the dollar's going to get weaker. Because what the dollar just did, folks, intraday, you know, it took out a B point. It looks like the index itself wants to go down to about 95,400. If it does that, it's going to get back inside its August swing area, which, you know, it's done 3 times in the last 6 weeks, sure. You know. But each time it says, I don't want to be here, and I jump higher again. You know, so.
I think you hit the nail on the head about that, too. It's the dollar weakness that's going to drive these moves. It's not necessarily the pound strength and stuff.
Well, you know what's intriguing, too, is that I guess the way that it works in the banking structure right across, not so much as in the United States, but the rest of the world, I was reading a couple articles on Bloomberg, is that they have to buy dollars at the end of the year just to straighten out their books. So it's really intriguing, like, have they done that all the way up to this point, and like they're done? Do you know what I mean? It's like, okay, so is everyone straightened out now? You know, because we're talking about, what, we had 10 days.
Yeah, I'd say it's vacation time,
Right.
and they might be already set, right?
Yeah.
I think that that's already been done, though, to be quite honest with you. I think the banks ended their year already last month.
And, well, you know, you can see gold's finally caught a bid. You know, we'll see whether we get some follow-through. Silver's the dog, man. You know, this whole silver thing is blowing my mind, actually. I mean, because silver, you know, you get some juice in it today, but silver hasn't seemed to be able to basically do anything. So
the spread is widening.
Yeah, it is. It is, you know.
Absolutely. I think something would be really something that people really need to pay attention besides the Fed news right now, and excuse me, and the dollar bearish momentum right now, is to key off the yen as well as the Nikkei. If you look at the Nikkei chart, they're teetering on some lows that are pretty dangerous, and I think that this is an area where if the Nikkei doesn't gain some strength over the next few weeks, we could see a leg down in the Nikkei that would touch off a big slide in the U.S. dollar.
Yeah, and you can see that. And as you're speaking, you know, I'm putting the Nikkei up, and you can see last night, folks, you know, we hit 20,880. The last low was 20,971. And that's a problem. And what Teddy's saying, and it's so correlated, man, when this yen gets strong, the Nikkei goes out of its mind, folks. And, you know, I mean, and gold goes to the moon. I mean, every time if that yen gets strong, I mean, what is that correlation all about, you know?
Gold 1,600 then.
Yeah, no, I'm just saying that it seems the most direct correlation. You know, I've had the gold report for 16 years now, 17 years?
Yeah.
17 years. And I'm always watching the yen because if the yen gets strong, gold market has it made, man. I mean, it just freaking goes.
Sure.
It's like, you know, the yen goes down a penny and gold will go up $10. It's like...
Yen strength, dollar weakness, right? Priced in dollars.
Yeah.
Yeah.
Yeah, but, you know, it's pretty wild, man. It really is.
Also, be a golden Christmas then.
Yeah, I like that. Listen, man, you know, Teddy, you know what's so funny is that one of the first this is when I remember the first time I got in gold was $282, $282.50 to be exact. And what ended up happening is that it was messing around like 300 and 320 for a while, and it was on St. Patrick's Day, man, that it actually exploded topside the first time it did.
Okay.
And so there was so many people calling the show saying they did it just for St. Patrick's Day.
Why not, man? Party hardy. It's a good day.
I'm telling you, man.
Totally.
You know, so like in a day like this, Teddy, you normally you're gonna wait for this statement, right, before you start trading anything.
Absolutely. Yeah. I have nothing going on right now except for a small euro position, but that's got a tight stop in it. Outside of that, absolutely totally flat right now. I'm looking for the reaction in the evening markets and then looking to get in tomorrow then.
Yeah, cool. Because this is a big one,
especially with
man.
the dollar-yen trade. That could be, this bear may really slam this move over the next, it could be there may not be a lull for the holidays at all. We may see some major moves trending into the end of the year next week.
That'd be intense,
That would be great,
man.
yeah. It's a lot to happen by December 31st.
There is a lot to happen. And there's you know, and that's not even saying, you know, are they going to have another vote for Brexit? Are they going to basically, you know, go south? You know what's interesting is that when I heard a couple of these people over there arguing, one of them was just saying, hey, listen, man, one of the analysts at Bloomberg was saying to them, well, you know, are you just going to leave? And the person on the other side said, hey, listen, they have a lot to lose too, because if they just leave, the European Union doesn't get billions and billions of dollars.
Okay.
So there's a correlation there that's pretty big. You know what I mean? Like, I think, you know, I had known that, but I didn't really know how big it was. And it's a monster. I mean, it's billions and billions. So it's like they have an incentive also to say, yeah, we're not going to give you anything, but guess what? You know, we leave on the other side, see you don't want to be here, and then try to negotiate the deal after that.
Yeah.
You know, so.
That's a good point.
Oh, it's going to be a wild one, man.
Right.
Well, listen.
I think the perfect storm is going to brew next year with that, where they're going to settle all this Brexit stuff. And then the EU, if they can get some balanced budgets across the other countries, the majority ones that right now are kind of waddling down towards some bad budgets and things like that. If they get that hashed out, the dollar could be in one big slide next year, which also could be good for us because the lower dollar, if we have a really big break going into the first and second quarter of next year, that's going to boost earnings for our market. So even if it's fledgling right now under the highs, earnings will be good.
Yeah, that'd be the perfect storm. in a great way, folks, for the markets, meaning the market could go right back up. Because, you know, I got all the interest rates up here for the world right now, Teddy, and I mean, it's still a mind blower that, you know, well, Germany is a 0.2% on the 10-year. You got Spain that's broke is at 1.3. It's like, really? It's like, but that's what it is.
That's going to change next year because the EU they're done with the QE.
Yeah.
Done.
Gotta love
So, higher rate.
Listen, folks, you can check out Teddy every trading day. You go to forex-trading-.com. Teddy, you have a great one, safe one, and what day's today?
Thanks,
Hey, Merry Christmas, man, because
you too.
it's Christmas.
Take care, guys. Appreciate that.
Have a great one. Have a safe one. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 226, Nasdaq's up 68, S&P's up 34, and good old 2 o'clock is going to be in action, man.
I can't wait. We should have lots of action, man. Just jumping back, speaking of action, oil getting a little bit of a bid. So we're trading at 48.12. We're trading about 47.70, about coming into those numbers. Higher oil prices. If you're going to fill up your gas tank, get out there and fill it up right now, man, because it looks like we're getting a little bit of a bid. And again, just kind of bouncing back to put ththings in perspective, right? There's yesterday's decline, so we're just in the middle of that range even. But nice little 40 cent bump. And what were the price? 47.50? Yeah, 47.50 was the price point of that if you were making that volatility trade. So we're now a solid 65 cents above that level, which would not have been bad.
No.
Yeah.
Let's go take a look at silver quick before we finish up this hour. And silver, which has had a hard time catching any type of bid. So it's up 0.9% right now. 33,000 contracts. Going to 60. Yeah, it's going to be a toss-up, man. I mean, it's not bad. This is good at 11 o'clock in the morning, you know. So it's been the laggard. That's the bottom line. So we'll see whether listen. There's going to be action at 2 o'clock. The real question is that are you going to get followed to the gold contract saying we're going higher? Gold is saying XAU, HUI. They took out B points. They got ABC structures on the way up. This is launching the. Oh, this is going to be good. Let me get this quick. Hurry up. Come on. Get it. What is that one? That's 200,000. Oh, we're going to do it. We get another ABC up. Okay, 8.1216, 56, $40, right?
Now, what time does this end at, though? 1:30?
1276. Good. We get an ABC up at 1276. Yeah, 1:30. It'll do another 50,000. Stay right there, folks. We got a fast market coming up, and then, of course, our man, Miss Basil Chapman. Steve Rhodes, Dave White, be back.
Thanks, man.
Thanks, pal.
I'm good, yeah.
I know.
I'm a little sick. We'll get there.
Okay.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.